unmuted and my screen should be visible.
You are unmuted and visible.
Excellent. All right, everybody. Welcome to a new week, May 9th, new office hours. As always, I'm Jamie Hodge along with Steve Gomez. Just want to thank everybody for taking the time out of their day to come hear what we have to say today. And before we get going here, just a little bit of the lawyer speak to get out of the way. Just want to make sure that everybody here is aware that we're a publisher of information here at Trade Ideas. We are not registered investment advisors, so everything that we share with you here today is strictly for educational purposes, so please don't misconstrue what we share with you here today as a solicitation to buy or sell anything. All right, moving right along. Just a little snapshot of what Holly was doing. Of course, today's statistics have not been updated, and we'll give you a little peek of that, and we'll actually, get into more detail about the Holly trades today and what took place there. I got a pretty full little hopper of information for you. As most of you who have been attending the webinars in the past have been hearing, Steve and I are starting to notice some different things happening in the market. Number one, a lot more short trades are being generated within Holly, and that coincides also with ourselves seeing patterns develop, that are more conducive to the short side, and it seems like those types of patterns are picking up steam, not only from what we can tell, what Holly can tell, but from, our extensive trading network of people that we keep in touch with. Everybody's kind of singing the same song there. Different things are starting to pop their heads up that haven't been present in a while, so we'll get into that as well. And then, of course, we'll get into some stocks to keep an eye on, some of the top list of windows. And then also today, we've got a couple of new windows we'll take a look at that are identifying bullish and bearish daily type candle patterns as well. All right, so let me get this out of the way. And what we're going to do to start the show here is, as always, talk about where the market is, what to expect possibly moving forward. We'll get the SPY pulled up here on the daily, and then Steve-O, you can take it away.
Yes, sir. Well, a lot of chop, a lot of back and forth ever since we hit those upside resistance levels. That was a downsloping trend line. When we left you guys last Thursday, it was looking like we had already filled in that gap, and we were getting ready to maybe pull back. And from here, it really looks like we could go one of two directions. It really looks like we could be building a cup and handle, which that whole area under the SPY of the chart would be the big cup. The handle is now being partly formed by the pullback we've had in the last 2 weeks, and that would assume that we're going to move higher and thrust back up to those levels of supply and try and have enough energy to push through. That's the bullish case and the bullish scenario for a possible pattern shaping up as a cup and handle. But we could also call it, if you zoom out just a little bit, we could call this, more of, can you zoom out a little? Yeah, let's zoom out a little bit. We could also call this, the beginnings of, maybe a right shoulder developing, a head and shoulders pattern, albeit a bit more ill-defined. So, we could go either way from these levels, guys. I fully expect us to continue to chop around at these levels, and there's a very good possibility we may move back up higher and try and take out those levels above 211 and the spiders. If this market wanted to roll over, it may have done so by now, but it just doesn't seem to have the follow-through. Every time we try and get a good follow-through to close on lows, the buyers seem to come in and push us up higher. We're still in the throngs of earnings season, so those are still some of the main catalysts that are going on out there. But technically, we're just chopping around back here trying to build a possible larger base camp and create a higher high. I don't know what it's going to take to throw us off that, but that orange line that Jamie drew is still very much technically sound as long as we stay above that line and close above that line. We could go down and test it intraday and pop back up like we do with many of the last hour of the days, the buyers showing up, which just continues to confuse things and make it seem like, well, maybe this market still is being bid. It's just only being bid in the last hour of each day. But as long as that line technically stays intact, we are still in the camp of the bulls. But big caveat there, We're going to talk a lot about today. The winds of change could be developing. There's a couple different ways to say it. I like to say the only constant in life is change. And I think Jamie has another way of putting it. Then the only thing guaranteed that at some point things that were working will stop working in the market. However we want to put it, that it feels like we're very close to something changing. And again, we're going to talk about some of the reasons why, using some of the trade ideas tools to give us a possible tell how some of the winds have been changing over the last couple of months. And I can tell you, just before we get into it, I cleaned out my price alerts for the month of May, and I am yet to get positive on it, and that's okay. It's giving me feedback to let me know that what was once working is no longer working right now. So that's a big caution flag to raise up, and it's good to know that a lot earlier than other people might start recognizing that by just beating their head against the wall and wondering why isn't this working anymore. But I can see on my price alerts and too, what was working last month and the month before is not working. We've got to pay attention to that, because that's one of the best feedbacks we can get from our price alerts, is looking to see how the aggregate P&L is shaping up based on our eye and how we are setting our trigger alerts. And if we're setting our trigger alerts in the wrong fashion and getting reversed on, well, that P&L is going to tell us pretty quickly that's not working. So I find that interesting. It's not concerning. I've been through so many winds of change, it doesn't even bother me anymore. But we're trying to make the focus of today's episode here, be aware of the winds of change and try and follow the path of least resistance to profitability. And we're going to talk about how we can use our trade ideas tools here to help you guys do that. Try and keep things simple.
That is absolutely true. And, piggybacking on what Steve was telling everybody there, granted, yes, that is what I like to say a lot, and there are no guarantees in the marketplace. We all know that, with the exception of one, and that is whatever you have that's working will at some point stop working. And so, just as Steve was saying, on these daily setups that we were identifying from the trend change lubricant, gangbusters, 2, 3, 4 weeks in a row, those things were just, we'd set a bunch of limit alerts, 2, 3 days later, they'd all be up 3, 4, 5 points. What was the one, the CPST, I think, on that week we were up 30 plus points because that breakout was so large. It was up 30-something points. So, but now we're starting to notice in the past couple of weeks, set those same type of alerts, not the same, flat to down a little bit. Okay, so obviously once we had this run up in the market, obviously it's the top tier stocks that are fueling that rise, and as we all know, the S&P and those index stocks, those are the head of the snake. So the head moves up, there's still plenty of time for those stocks in the body to be identified, and as that undulation occurs, we were taking part in that snap effect, pulling the rest of the market up. But now that those plays are starting to peter out in a sense, that's telling us a lot of the stocks in the body have played catch up to the head, and we're in this new range here. So, as soon as, a couple days down the road, we'll have a better idea if we're going to be heading back up or testing these lower extremes, but the theme remains the same. Things that have been working like gangbusters only in the past 3 to 4 weeks are starting to kind of die out, and we're not getting the alpha that we were seeing in those. So being aware of the change is a very good place to be, and sometimes it might be a little uncomfortable, but hey, welcome to the trading markets, right? So,
Yeah, the sooner you can identify the winds of change, the better, because otherwise you are destined to become that guy that Einstein talks about, the guy who keeps getting a result and expecting a different result. We don't want to be that guy where it's just thick-headed numbness, where why isn't this working? I'm going to go back and do it again tomorrow. Why isn't this working? Go back and do it again tomorrow. This is where you got to really pull back and reassess, what's working and what's not working. Why is it not working, and what could we do to make it work better? So keeping it as simple as always is what we're going to try and do, and keep everybody focused and pointed in the right direction, the path of least resistance direction, that is.
Yes, and exactly what you're saying, Steve. In our tenure in the business, we've been that guy that is technically crazy, because that's what Einstein is saying. doing the same thing over and over again and expecting a different outcome is the definition of that word we like to use called crazy. So we don't want to be that guy. We want to be constantly aware of the changes, make those adjustments. It's not always going to be a pleasant thing because we humans, we know that the only constant is change, but we fight change like there's no tomorrow. We have to really be aware of the change and embrace it and roll with it because that is the only constant. We have to constantly adapt.
Yeah, so in the theme of trying to help lead you guys in the direction of least resistance and keep things simple, we're going to start off on a channel here today, which is our sector channel. And this is something I spend a little bit of time on with everybody that comes into my hour of power when I'm working with a new trader, and especially if there's somebody new to trading. I mean, I always go through and then literally make a copy of this particular window, and I put it in their cloud so they have it because I want them to have it that much. This is a copy of our sector analysis and our heat map. And these things, if you start paying attention to them 10, 15, 20 minutes after they open, they start to give you a real early tell of where the winds are blowing, where the money is flowing. This bull market is it's impressive because what's strong one day is rotated into another sector the other day. It's like that old guys trying to spin plates on the stick of the Ed Sullivan show. One plate starts wobbling, he goes over there and spins that plate and just tries to keep all his plates spinning. That's kind of how I've seen this rally here. And if you consider the different sectors, the plates, once one plate starts to slow down, well, money seems to come in and start to spin into it again. But today, 15, 20 minutes, even in 30 minutes into the market open, you should have been able to get a really good map as to where the money was flowing today. And that map today was biotech extreme on the upside, and on the downside, let's wheel it down to the downside. It was our gold and our oil. And so right off the bat, there's an early indication to you of where the money is flowing, so that when some of your alerts start popping out, or when Holly starts taking long trades on the biotechs, maybe you have a little bit more confidence to know that the winds for the day are at the back of the biotech sector. So it's really always nice to know where the winds are blowing, where the currents are going. So it just gives you one more piece of information, because nothing worse than pointing your canoe upstream and then just paddling like crazy into the up current and not going anywhere. That's not the path of least resistance. The path of least resistance is to turn around, let the bow head downstream, and pay attention to what's going on around you and start working with the stuff that is moving in that direction. So having a helicopter that you can pull up into the sky and look down and see a heat map here of all these different sectors to see where the money's flowing is an easy part of the puzzle. And this should be part of your daily repertoire. Now, what I do is I show people, I don't necessarily have this on my screen where I'm watching it intently all day long. There's really no reason to do that. You can just minimize this. I have this on my daily default layout, and I pop it up and I look at it a couple times in the morning, and usually by an hour into the market, I'm kind of done, because that's where things kind of shape up. It's very rare to see, an industry group come out strong in the first hour, then roll over and go to lows the second hour. These things tend to kind of keep on the same vein that they're showing you after the market opens. So use this as a great tool, and put this on your main screen. Like I said, you can right-click and save this to the cloud, and the next time you're in your main layout, pull it down, and you don't have to find a space for it on your screen. Just minimize it. I mean, I've got about 10 or 12 windows that I keep minimized, but I still use them on a daily basis. I just go down and locate them, bring them up. The single stock window might be one of them. The new sector analysis might be one of them, and some others that I don't need to have all the time. So I'm just reminding you guys, it's really important to have a copy of this to know where the winds are blowing each day, because that's one of the ways it's going to try and keep things more simple for you. What are your thoughts there, Mr. Jamie?
I agree wholeheartedly, and as you already pointed out, just you already beat me to the punch, but yeah, ladies and gentlemen, just right-click and save this guy, or just move it over somewhere else, and then right-click and pin it if you want it to stay there and not go anywhere when you change channels or change your layout or whatever. Alrighty, so let's talk more about using these windows and embracing what we affectionately call the Holly Trinity, because the windows, the top list windows and the alert windows, are where we're going to be aware that the action is taking place, and then we're going to take a look at our chart and look at the footprints in the sand, and then we're going to use a window like our price limit alerts to make sure that we articulate that into the system so that when that opportunity does present itself, we are made aware of it. So I tell you what, let's see here. Let's go ahead and talk about Holly. And let me get my Holly layout pulled up here. Very, very interesting day playing out with Holly today. And, David, yeah, we're going to talk about, your question there about, and let me just read this out here before we get started here. You were talking about why don't the programmers, make changes to Holly on the fly during the day. Number one, that brings up a good topic because that's not how the system works. Throughout my tenure in the business, and Steve can probably, reiterate this as well. As traders, unless you're tape reading, which is a dying art, which is looking at the time and sales and trying to figure out what the stock's going to do by the prints and all that good stuff. There's an old saying that says, all the work's been done before the bell opens. All your computational analysis, all the things that you want to keep an eye on, it's already been done before the bell. When the market is open, it's time to act on things that present themselves. But the game plan has already been laid. And so, just to reiterate to everybody, what is Holly? Holly is not a black box system. Holly was designed only as another window supplying our users with high quality information. Now, this high quality information comes in the form of entries. That is Holly's strong suit, so to say. Because regardless of the outcome, these were the statistical probabilities coming into the session today. So, when we start looking at the trades that were generated today, quite a few, and Holly was down today to the tune of about just a little over 4 points. Now, if we look at the strategies, most of the losses were generated from one strategy today, which is one of the more aggressive strategies. But let's go back in time about 10 minutes ago. The winds of change are upon us, right? We're starting to see things, present themselves that we have not seen in the past. Number one, just look at the amount of strategies or the short to long ratio on the strategies that Holly had in her hopper today. So we had 1, 2, 3, 4, 5, 6 shorts, and 1, 2, 3, 4, 5, 6. Now, in the past we haven't seen near this many short strategies showing up, but now that conditions are right, we're starting to see these things. So, looking, let's do this. Let's just take a look at the blotter today, and we'll look at some of the plays that came out today. So right off the bat, and by the way, it's kind of important to kind of pull up the market here and look at the action that we had today. We had a slight, from the prior close to today's open. Steve, I think it was, a very small gap up that we had. And then try to go higher, flips it back down to lows, and then just kind of this little, this little range-bound activity here today. Going up one time period, then we're zooming back down to going up to highs, going back down to lows, inch-worming our way back to highs, back down, and back up again. So, from anybody's standpoint, a whipsaw market today, not the easiest market to, to get a hold of. And, this is going to tie nicely into what Mike asked earlier at the beginning of the webinar, the compare count windows. And we'll get into that a little bit later about how we can actually use those things to help us prepare for what type of day might be on the horizon. Okay, so a couple of the stocks that Holly spit out today were in the, for example, Epizyme, EPZM today. A short play issued from the Bollinger Reversion Scalp. So if I zoom in on the chart right here, we can see this is where Holly made the call. Now, by the time it was all said and done and Holly hit her hold time, we can see that it was a time stop. And just to reiterate, there are 3 different ways that Holly can exit the trade. The time expired and she exits because of the time stop, or a stop loss was hit, or, of course, it's not present today, but sometimes she'll hit a profit target, and that will be the 3rd way that she can exit a trade. So once again, Holly's going to have her winning days and her losing days. Now, of course, you know, Holly was down 4.25 points today after everything was said and done, but it's about the overall performance, ladies and gentlemen, because any system or any culmination of systems is not going to make money every day. You know, show me one that makes money every day, and then let's try to find the wizard behind that, because that's magic. No system makes money every day. So when Holly is kicking out 5 and 8 and, you know, strings of winners here, it's only natural to think that a day like this is going to come along. However, reiterating the fact that Holly was never designed to be a black box system, you know, where can we read between the lines at what we can't see here? Because Holly is that trader that goes before you. All right? She's trading with statistical probability, which in the long term works, but just like any card counter in Vegas can get a bad run of luck, even though they're using statistical probability, they can have a losing session. So can one of these Texas Hold'em players that you see on television. What's the guy's name, the main dude, Phil Hellmuth, who's always in the top, you know? Well, Phil has his bad days, just like any other poker player. They just don't put that on TV, right? But playing statistical probability is no guarantee that every day is going to be a winning day.
Right.
So, you know, Holly on the long term more than likely will come out on top. And of course, as everybody knows, we show you, you know, after every session on these webinars, how she's stacking up against the S&P. And even though today was a losing day, I mean, yeah, it's like Steve was saying earlier, we popped our 52-week high, and now we're taking a little pullback.
Yeah.
You know?
It's the typical 3 steps forward, 2 steps back. But in the long run, like the casino, you know, they're always going to have the odds in their favor. You know, are they going to win every single hour, every hand that's being played in the blackjack tables? No. But statistically speaking, in the aggregate, over the long term, that's exactly what, you know, is being shown there. So, you know, Holly's going to have her days, like I think Dan mentioned earlier. You know, she crossed a couple of landmines this morning for us and showed us it's a little volatile out there, but nonetheless just keeps on swinging and giving us some clues to possibly trade around or get some cues from.
Right, and I believe, let's see here, where is CVG? These symbols are eluding me today. Okay, so CVG was we have a 7-cent winner out of CVG. But, you know, on the intraday, that's all fine and good. But then let's take a look at CVG. Why were we looking at this stock? Because Holly was in it. So, you know, even though we're seeing what the performance was here, this is a stock that, unless you had it on your watch list, you would have never been looking at CVG today. It was an opportunity that Holly brought to you. So as Holly brings up these plays, whether you're in them right off the bat or whether you're seeing her get stopped out or a time stop come up, you know, looking at this thing on the daily might present some completely different type of opportunity for you. You know?
Yeah, those are my favorite emails that I get from some of our traders, some of our customers without you guys we would be nothing. So we're paying very close attention. But I just love it when I hear an email. It's like, oh wow, you know, Holly brought up this stock to my attention a couple of days ago, and I kept it on my radar, and now I'm loving it. And that's really the idea. That's what we want to be hearing from you guys. Is this is an idea generator, and just because it's closed, time stop is 30 minutes doesn't mean you fold it and put it away and never look at it again. I mean, CVG, honestly, I was not aware of this stock until it came out today, but now it comes on my radar and it starts to come to my attention, and I see things that on the longer time frame, the bigger scheme of things, I would like to know about. So I take it one step beyond Holly and go ahead and mark up my daily chart with a possible price alert to bring it to my attention if it should. But the point being is this is trade idea generations, and it doesn't mean they have to go away in 30 minutes just because there was a time stop. You know, look at the long term of MDV in there. That thing has just been paying dividends for those people. It actually doubled for them when it looked like it was going to hell back there just in early February, January. All of a sudden, it's doubled in price. And so, you know, our idea generating system is looking for, you know, ideas to try and bring alpha to you, whether it's on the course of a day or maybe even the course over a few months. There's always the possibility that these things can turn and go higher, and you know, bringing these to light is one of the greatest things I love hearing about. Like I said, to go full circle is when I hear somebody tell me in an email that they would have never known about stock XYZ had Holly not brought it to their attention a couple of days prior, and they kept it on their radar, and that's exactly how we want to hear it.
Right, and you do exactly what I did here. You just start marking up your chart and putting your limit alerts in there, you know. If we back this out a little bit and we say the high today was 62.87, you know, it's real easy just to come in here. What I say, 62.87? Hold on 1 second. 62.87, right? So 62.88, you know. If it pops above there, I want to know about it. And once again, you know, this methodology right here, it's rational Jamie going, okay, this thing's got steam. It's off its bottom considerably, but it's doing something for a reason, and it's approaching these upper extreme levels here. I can clearly see this little area of, you know, interest right here that I've blocked off, looking at that prior resistance and the top of today. So, you know, tomorrow, whether it's 10 minutes, 15 minutes into the open, you know, if I get that alert, I'm not going to be sitting here going, oh, it just ran up too much. I don't know if I should buy it. You know, I'm going to be calm and rational and go, okay, I mapped this out because rational Jamie, when the market is not open, is saying, okay, this has good potential. So tomorrow when the market is open and I get my limit alert, I'm simply going to act on it. You know, I'm going to act on it. I'm going to put my stop loss in, and I'm going to move on to the next thing. And, you know, that's why we do that. That's why we do this. That's why we put notes in there and we say, okay, this is a trade around from a Holly play, you know, that I saw many moons ago, or it could be a day ago. But that's the whole concept here, is incorporating all of these three pieces into the Holly Trinity. We get the action from our windows, we look at it on the chart, and we put it into our limit alert window. And by the way, Holly, you know, once again, just to reiterate, not a black box. So this morning, you know, things got off to a relatively mediocre start. We started seeing the PB short pluck a couple of positions out. They started working, you know. Then later on, Moxie starts doing its thing. And if you've been watching the AI over the past 4 or 5 months, you know, because everybody needs to keep in mind Holly's only, you know, she was only born in late December. So Moxie has been a long strategy, right? And clearly today, what we've seen Moxie do is get into some things that aren't working today. So that's information for us. It's letting us know, number one, Holly's losing in these trades that were typically working in the past. So what is that telling us? It's telling us that things are changing. Right? And it's also good information because Holly is that person that sits next to you and trades with perfect statistical probability. Sometimes she gets into a trade. You might have liked the trade. You might have went with her. And it goes and everybody's happy. Well, today, what was happening, Holly tries to go long. She runs out there. Boom. Steps on landmine number 1. There goes one leg. Boom. STMP. Another landmine, and you're sitting there and you're like, oh my goodness, Holly just got both legs blown off, and you know, what am I going to do? What should I do? What can I learn from this? Well, number one, for this particular strategy, be very careful, and for that matter of fact, anything that's along today, you know, unless the chart pattern looks really good and you're really comfortable with it, you know, there's no pressure, okay? So if Holly's having trouble, once again, what is this doing? It's giving you information about how you should proceed.
You know, it's like the golfing analogy again. I just love this analogy. You've got a golfer in your foursome that's a scratch golfer, and you just can't help but observe and notice some things that golfer does, he or she, to get them to that level of performance. And you know that going into the route, but maybe on the back nine, all of a sudden you start seeing that particular golfer showing up short on every putt. And you're making a mental note. Geez, this golfer's really good, but this one, he's still struggling with the distance on these putts here on the back nine. That's kind of unusual. And you're making notes of that. And how you adjust for that in your golf game is up to you. But still, you're keying off of an entity, in this case, an AI entity that has no emotions, that just fires away whether both legs are blown off or not. It will just continue to move forward and do what it does until the bell rings at the end of the day. So, there are things to be gleaned and taken away from, just like you have, when you've got a professional golfer in your group and you're watching how they play the lay of the land and how they manage their risk, etc.
Yes, so everybody needs to keep that, we keep, circling back around to this fact, but Holly is not a black box system. She was designed to be another high quality information source for our users, and, a lot of the times it will take some hits for you so that you don't have to, all right? And it's usually pretty obvious what's happening. And, once again, just another high-quality information source. So let's look at a couple of the other ones, like, for example, we were just looking at MDVN. Clearly something was going on with the stock today. Holly gets long at the top, quickly gets stopped out for a 67-cent loser.
Very
and this all happened within a 1-minute candle. We're looking at 5-minute bars here, but if we were to go back and look, it all pretty much took place, and I'm sure a lot of individuals out there kind of went through the same thing. Of course, Holly can act a lot quicker than those individuals, but the bottom line is, this crazy wick happened, pulled back, but there was a reason for this. So then the stock starts to stabilize up here. Put this back on 5 minutes. So let's say, obviously you're sitting there, you're like, what? Holly just got into a stock and got stopped out in a minute. So what do? You watch it. Then it gets back up here, starts doing the little NR7 dance, which is what I would immediately identify. This little pattern right here is one of our alerts that we have on multiple time frames, little micro consolidations. So after the craziness happens, and you're starting to see, well, starting to kind of firm up here, and now I can define my risk. If I'm getting long somewhere here, my risk is down here, and still more upside potential. Now, what's MDVN going to do tomorrow? Well, it looks like it's creeping up a little bit in post-market. If everything behind this move is still present in the morning, perhaps it continues. Perhaps it doesn't. But you know what? We could always go to our daily and try to figure out, and of course that's why I drew these little lines here. If it pops up above there tomorrow, I want to be in it because I think this is the potential right here that I could glean from it. And while we're on this topic of multiple limit alerts, Steve, there was a stock that you and I were tossing around earlier.
Is it First Solar?
Right. FS.
Bracket
Yeah.
baby.
Let's see. Yes, another Holly trade today. Now this is one that actually got short here, motored down quite nicely, and then look at this little basing pattern, this little channel, and of course, Steve, look what's happening post-market. So we were on the topic of when we see things like this, and First Solar's down pretty significantly from its top. Everybody knows that. Solar stocks have been the darlings and the pariahs, but the bottom line is they're active a lot of the times like the biotechs. So when you start to see a closing or a daily pattern that closes in a channel like this, then of course the post-market activity is kind of putting a damper on it. But when we see things like this, we really don't know which way it's going to go. We can see it's getting down here, but of course it was approaching a resistance or support, possible support levels the whole way down. So when we're seeing a situation like this, we think to ourselves, well, I know one thing, it's going to move. I just don't know which way it's going to move, but I want to be alerted to it when it either pops to the down or the upside. So, especially in these markets, what we can do is start setting up some limit alerts like so. So the high of that little wick right there would be 50.90. So we set one up to the upside there, Holly play bracket. So we've got our upper limit here. And then, I don't know, Steve, would you go here or here? I think here would have been the pure play. But of course, we're already starting to get down below here. But just to illustrate, what a bracket would look like, we'd take the low of that candle there, be 50.02. And if it goes down there, once again, would we want to go long or short? On this one, if it punched through, I'd probably want to go short if it falls to that level. Of course, everybody's got their different opinions. Some people may want to play these levels. But of course, after we see what the stock's doing post-market, it's kind of a moot point, but it's the setup and identifying the setup that is the takeaway here. All right, and I think, let's see, we've already talked about the Medvan. What was that other one? EPZM. Another little guy that is, got down here to his lower extremes, and if we drew a line straight across here, we can see, that's kind of our lower extreme area. And then this little guy, what's he going to do? Is he going to march back up and act like one of our trend change lubricants? Or is he going to go back up here and fold over? Well, you never know. But if you want to keep your eyes on it, keep yourself apprised of it, then we could start setting up different little levels here. We could even go, we could make a multi-tier, breakpoint system where we go here and here, if that's what we wanted to do. So, the theory is the same here. Some charts are going to, some chart patterns are going to look more conducive than others. Some are going to be tighter and prettier. And then some of the times the ones that aren't so tight actually go. So it's really about just setting up as many of these alerts as you can as you go through the process so that you always have plenty of high quality information flowing your way.
Well, is it time to experiment around with the compare-contrast window, or did we hit everything on Holly?
I think there's not a whole lot of trade arounds here today. The takeaway today is being made aware of things that Holly triggered, whether she won the trade or lost the trade. And figuring out, of course, obviously we can go back and look at the non-exit profit column, and we can see that, yes, indeed, the stops are working. Even though it was nasty and we took a $1.39 loser in double wide today, had we not taken that loser, $3.30 out of the money.
Yeah.
And to get back around to, I forgot whose question it was earlier, about adjusting Holly on the fly, just to refresh everybody's memory about how is Holly set up, how does she work? Well, right now she's already doing her calculations for tomorrow. So you see, by the time the open rolls around, all the statistical analysis has been done. The strategies that show up in the Holly strategy bin are those that are statistically weighted for the next day. So even though we had a little speed bump in the road on Holly's performance, that's par for the course. There were still a lot of high-quality information and high-quality longer-term setups that we were alerted to that we never would have been alerted to if Holly wasn't doing her thing. Okay, so let's talk about the compare count windows. I'm betting that most people out there probably are not using these guys.
Just so you know, so you're up to speed, Mike added a little bit of a twist. How do you make a compare count window to show relative strength between a ticker symbol and an index, if that's even possible? I think what you mean to say is an ETF, because he goes on to use the example of ARGS and IBB. or relative weakness between the two. Just wanted to throw that out there in case you hadn't read that. It was a bit of a qualification on what to look for, perhaps.
Okay, what were the two symbols again?
For an example of ARGS and IBB, so a symbol within the ETF, I think is what he's saying.
Okay.
Is there anything
well,
to glean from that?
First off, I just pulled up the compare count window here, a fresh one. Now, real quick here, just let me pull ARGS, which is just one of the stocks in the index. Okay, so what is IBB doing compared to what ARGS is doing? All right, so before we try to address that question, what I've done here is pulled up a new compare count window. And I just spawned it right from the toolbar by going New, Compare Count Window. And by default, it's going to pull one up that's just looking at new highs versus new lows across the broad markets. Now, what do I mean by broad markets? Well, when I right-click and hit Configure, you can see when we're in the Compare Count window, we've got a side for red data, we've got a side for green data. Now, if I click on Configure for the green data side, voila, we're basically within an alert window here. This should look familiar to everybody. So what are we looking at? Well, stocks hitting a high, a pre-market high, or a post-market high. Stocks between 1 and 250 with minimum daily volume of 10,000 shares. So needless to say, you're going to get just about everything and the kitchen sink in this type of scan. But it's more of a pure way to look. It's kind of like the tick on the NYSE. Advancers versus decliners. So, thinking in the fact that these are just two independent alert windows that are bipolar opposites of one another, one's looking at stocks hitting highs, one's looking at stocks hitting lows, pre-market, post-market, and regular session, filters are the same. So as these events unfold during the day, this little guy would keep a count. Every time something comes through that one ticker, keeps a count. So it starts establishing a ratio of advancers versus decliners. Now, we can get a little bit more specific than that because we can put any alert window in there and what we'd like to compare it to. So, real quick here, a good example would be well, I tell you what, let me just do this instead of trying to pull them up. In my default layout, I've got
turbos.
Turbo breaks up and down, and I've got them pointed to this window here. So turbo breaks up and down live in this compare count window. When we go in here and take a look, there's my turbo breaks up, and over here is turbo breaks down. Now, keeping in mind that these are looking for stocks hitting highs and lows with accelerated 1-minute volume that are fairly liquid with 500,000 shares a day over the 10-day average. If they're meeting that 1-minute volume requirement, they're all pretty much going to finish trading well over 500,000, trying to keep the garbage out. So working on the predication that a lot of the stocks, but not all of the stocks coming through here, are being purchased by institutions for the day, and the high volume stocks coming through here are being sold more or less by institutions. So I think it's important to keep count of this. So after the first 30 minutes today, I noticed 55 green, 45 red. 55% green, 45% red. Now, I've been watching these windows long enough to know what that means in my book. That means after the first 30 minutes on some of the most active stocks in the market, if I'm seeing a 55-45 mix, then that's telling me, okay, it's going to be one of those days. It's not going to be clear-cut to one side or the other, so you better be very forthcoming and conservative today and really put yourself on a trading diet.
What's a more clear-cut mixed in your mind if 45-55 is not quite the desirable?
Right. There's no clear bias one way or the other, and, you know, we looked at the SPY, and I was like, what? You know, what kind of gap up was this? It was barely even a gap up, right? And then, of course, look at the way the day played out. You know, there wasn't really a clear-cut bias. We go to highs. We go to lows. We try to go to highs again. We pull back. We barely got out, but boom, right back into the range. No volume. So when I see 55.45 after the first 30 minutes, that gives me a little idea. It's like, okay, I'm about to drive down the 5. Is there any traffic out there? I'm going to consult my iPhone, and I'm going to look. And it's going to tell me. I'm going to be like, oh, I should be able to get downtown in 20 minutes. Well, when I see that traffic, might as well just build in an hour for the trip. This is the same thing. Now, from my own experience, when you start to see one direction and the bias is 60% or better, then you're getting somewhere. You're like, okay, it's not going to be one of these iffy days. There's going to be a bias. It's not going to be the strongest, but it is going to be a bias. You know, once you start seeing over 60%, and then on those days, and there aren't very many of these, maybe 2, 3, 4 a month, if we're lucky, where after the first 30 minutes you see over 70% and higher. And those are the days, if you're watching that bias, if it's to the upside, hell, buy your initials. It'll probably work that day. But, you know, it's a pretty good barometer to give you expectations of what the day will bring. It's our own way to have you, the user, create your own custom tick, whatever you think that is. You know, whatever you feel is important in an alert window combination, you can immediately convert that into a compare count window. Now, that's looking at diametric, you know, that's looking at opposites of one another, which is the way these windows were designed. But Mike was wanting to compare ARGS against IBB. So see, the problem would be, okay, are we going to be looking at bullish events, or are we going to be looking at bearish events, right? And we can only pick one, right? So I don't know if, you know, if we plug, you know, IBB into one side and ARGS into the other, well, then what's the configuration going to be? Because we could keep count if we knew what exactly what it was we want to keep count of. So, you know, if it's IBB bullish ticks, well, then do we want to compare IBB bullish ticks to ARGS bullish ticks?
I think that's the question he's asking, actually, yeah.
Well, you know, if we were going to do that, first we would set up a window, right? An alert window with whatever the alert is that we had an interest in, or if you really want to get crazy, you know, and of course, wrong one. Pardon me, ladies and gentlemen, when your cloud gets as full as mine, sometimes you pull up the wrong window. Okay. So for example, Spy Watcher. Well, what in the world is this? Well, you see, if you're really wanting to keep your fingers on the pulse of one symbol, I've created a multi-strategy window here, which just allows us to consolidate alert windows into one window, so we only have to watch one as opposed to multiples. But you'll notice I've got 2 different strategies in here, a green and a red. Well, if I look at the green strategy, what have I done here? I've selected every bullish alert that we offer. But if we look at the symbol list functionality, it's just watching the SPY. And then I've got the downside, and I've checked off every bearish alert. And once again, it's only looking at the SPY. So, ladies and gentlemen, during the market hours, every time the SPY takes a breath, I'm going to know about it. If you look at the frequency here, of course, get back down to when the market was open, look how frequently I'm being fed information about the SPY. And then I can see what that event is, you know, whatever the alert is firing. And then I've got my good friend 1 minute volume right here. Just as a refresher, a value of 100 is normal 1 minute volume. So, you know, if you create a window like this for ARGS and IBB, and you're watching these things side by side, you're going to be able to pick up on some type of flow. Now, because I haven't done that, I'm just hypothesizing on it right now. You know, obviously, we could set it up, you could watch those windows, and eventually you're going to start noticing correlations. These windows can be very helpful if you know how to use them. Let's take the SPY, for example. When we're in this area right here, nobody knew if we were going to go back up the tops here and see if we were going to push higher, but that's what happened. So if we draw a line straight across, like so, and we come back over here, as we were approaching this level, that was the 1150, 1155 area, 1150 to 12, right? So I've already got the history up here. Let's just scroll back and see. And see, this is where things can really come in handy, these types of windows. I was just having this conversation with somebody the other day about the SPY bouncing off the bottom. Now, here we are at 1150, 1150 to 1155. Here we are 11.5 to 12. Look right here as we're approaching these levels. Now, my rule of thumb is this. As the SPY is approaching these levels and as it's penetrating these previous wicks, if we're seeing 1 minute volume levels exceed 300 plus, that's typically an indicator that we're going to not only set a new high, but go higher. We're not going to fall back down into the range. This is actually much more anemic than what I thought it was going to look like before I scrolled back to this time. If you were watching the SPY get up here and this was the most we got, oh, you got a 260, a 280, and that's it, and then back down to normal or below normal, I mean, that is the tell. That is your edge that tells you, you know what, the volume's just not here, we're going to curl back over. And quite a nice little down move as well. Now the other day, I can't remember if it was Thursday or Friday, exact same thing, but to the opposite side, identifying that the SPY was indeed not going any lower, but getting ready to bounce. And I even think that's on my Twitter stream if anybody wants to go relive that. So, these windows can be very useful, and keep in mind, it doesn't just have to be the SPY. It's any window that you want to keep your fingers on the pulse of. So I tell you what, this window right here is not, it takes some time to put together. So in order to save everyone that build time, I'm going to pop this one into the chat, and then you can take it and duplicate it like so, pop back into these strategies, and simply change the symbol. So this can be a Google watcher, an Apple watcher, or an IBB and an ARGS simultaneous watching windows. So let me do this. I'm just going to pop this into the chat, and everybody gets a new toy for the day. And we all like new toys.
It's like going to the dentist. Choose your toy.
Okay, so number one, I hope that addressed the compare count issue, and then more importantly, just as we pointed out today, if you were watching this window, you had a pretty good idea that we weren't going to punch higher, that we had a pretty good chance of falling back down into the range, and you can apply this to any index, any stock, anytime. And, Mike, duplicate this window. Keep one for the SPY, make one for ARGS, make one for IBB, put the IBB and the ARGS together and watch them moving forward, and very interesting. I'd be interested to hear back from you once you do that and let me know what you found.
All right, well, I think we're all caught up on the questions I was handling there while you were talking with a few people, and look at that, we're at the top of the hour once again. How time flies.
Isn't that the truth? I feel like I've been in a time warp. I just woke up, and now the day's over. Of course, we get to wake up at 5 o'clock here. So time compression in full effect. So I guess, yeah, time flies. So Scott, if you're waiting in the wings there, I think everybody's ready to hear about those coupon codes and our pricing structure and how things are going to be changing.
Yeah, why don't you put on, I don't know what the slide number is, the one that shows the existing price structure, and then we'll explain what's happening. With the changes that are going to be coming toward the end of the month or early June, these are the current pricing schedules, so this is still in effect at least through the end of this month or thereabouts. We have a core subscription as our basis for a software as a service company, kind of line of business. So that starts at $99 a month for the monthly, and that's recurring automatically. There's no contract, cancel at any time. It includes your exchange fees, all the real-time data, the charting, very importantly, a full hour of one-on-one training with either Jamie, Steve, or Brad. Usually Jamie and Steve, they do a great job. As soon as you sign up with Trade Ideas, go to the training section, go to the support section, click on training, and then pick your best time and date. The annual, of course, saves you a little bit over the monthly, so it's only $888 a year. Pretty good savings right there. All the same great stuff. Again, automatically recurring, no contract. Now, to have access to the AI channel, the odds maker backtesting tool, Holly the AI, the price limit alerts, the new high functioning stuff that requires that level of permissioning, that's a one-time $1,100 license cost, and that lets you use Holly, find trades that are performing right now, backtest and optimize your own strategies, all without programming. So where we're moving towards when we have some of the changes to the way our subscriptions in the back office are managed by our database, we're going to roll out the following change. So on the next slide, you'll see what the pricing structure will look like when we roll the change out. So on one hand, it's a lot more simple, but on the other hand, the premium services are going to become a little more expensive. We're no longer going to have the one-time $1,100 purchase. Where we're going to is the same $99 per month or $888 per year for regular Trade Ideas, and then Trade Ideas Premium, which will include the AI, all the high-functioning stuff, the Holly, the backtesting module, all of that. Very simply, it's just going to be $188 a month or $1,888 a year. So obviously, that is a little more expensive than if you purchased for example, even at full rate, $1,100 plus $888 is $1,988, and that's a one-time cost that renews at $888 per year after that. So the $1,888 per year is going to be more spending than what we're currently able to offer as a package on renewal. Something to keep in mind, the effective date for this is going to be the end of May or early June. If people who already have subscriptions are going to be able to purchase the AI lifetime license moving forward if you already had a subscription before we do the price change. So we're going to make it easy for people who are already subscribers to still be able to get on board with the same price, but once we choose that date, that is the date that we're going to roll over to this. So now on the next slide, here's the good news. I also want to direct your attention to the handouts panel on your GoToWebinar interface. I always forget to point this out, but there's a PDF right there for you to download that has all the same information I've been talking about right now, and also the product code I'm showing you on the screen. So the code HOLLY11, that's all caps, HOLLY 11, just use that on checkout, and that instantly takes 50% off your first month. So you can try us for $49, really no excuse. Get the training included with that, and then it renews at $99 a month ongoing. Yearly is gets a 20% discount, so you can get a year for just $710 instead of $888, and then renews at $888. And you get the lifetime odds maker 30% off if you use that code, which includes the artificial intelligence engine, Holly, and that's just $770 lifetime using that code. Now, the product code HOLLY11 expires on Friday, at the end of business on this Friday. So if you're going to use this code, you're going to want to use it before then. If you do want to pick up the whole package, including the AI and a whole year, there's a link we're going to show you on the next slide here. It makes it easy for you to just do it in one transaction. So if you go to bit.ly/AI Holly, and the AI Holly needs to be all in caps, or just open that PDF you downloaded and click through. And using the same code there drops the price from $1,988 to just $1,480. You save $508 immediately, and then you renew at $888. So compared to what we're moving towards, which is $1,888 per year for access to the AI and Trade Ideas, you can get it with a one-time purchase of $1,480, and then it renews at $888. So this will be, most likely we'll have this package available until the price change. Again, but that code, Holly11, is only good till Friday. So for this exact package, if you want to use that code, it's best to act now. Thanks, everyone, for attending. If you have any questions, email us, info@trade-ideas.com. You can reach Steve. He's steve@trade-ideas.com, or Jamie is jhodge@trade-ideas.com. Follow us on Facebook and Twitter, all that kind of good stuff. We should have a recording of this up later tonight or tomorrow morning. Again, any questions, just shoot info at an email. That's the best address for that kind of stuff. Steve, Jamie, thank you guys.
All right.
Thanks, everybody, for showing up. Have a great week, and come see us on Thursday and Wednesday.
Yeah, cheers.